We've
Sure.
talked about the possible downturn from the economy overall from coronavirus, specifically with oil. What are you looking at? And particularly, we talked about V versus U versus L. What are you looking at?
Well, we're already looking at a very big decline. That in February, Chinese oil demand is more than 20% lower than it was a year ago, and world oil demand is certainly going to be much lower than had been anticipated. We think it's going to be lower than the growth than other people think. And I think it also continues into other commodities. Our material price index shows that commodity prices last week went down 6%. So all of this is a result of China. Just when you thought the trade deal's done, things are recovered, we're not going to decouple, well, we now see China slowing down and a de facto decoupling with airlines cutting their air service to China.
Okay, so that's on the demand side. What about supply? Is OPEC Plus going to weigh in and cut more?
Well, they've been going back and forth, and I think it in particular has to do with whether the Russians, the most important part of the plus is Russia, and whether they want to get on board, and they've been hanging back. Partly, I think, because the Russians say if you cut supplies, it's only going to benefit the U.S., and we don't want to give more market share to the U.S. But I think the signs are that they're going to edge towards that and try and put some kind of floor under the price in this very uncertain situation.